Bring that ass back like a boom, 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 boom.
Hey, what's up everyone? This is Supernova and you're with Boom Traders Weekly Overview. Today is July the 24th, Sunday, and we're doing the review for the 29th week of the year. So, just as usual, let me get you through the session overview. We have first and foremost the risk vest model, then we take a look at the tactical trading environment, current markets, take a look at some charts, sentiment, strong and weak groups, stocks, and then we're going to do a summary. So first things first, the risk vest model, we still have that negative sell signal, if you wish, from November of last year. We had a couple of blips, positive alerts going forward, but overall we're still looking for that turn of the market, still on negative. So extreme caution is advised when trading to the upside. As you can see here, some of the fundamental elements that go into our risk vest signal. The general market right now is on neutral. It's been rallying for a couple of days, but we stalled on Thursday and Friday. At some places that we had initial information that there'll be resistance, so nothing really surprising here. Up down volume is positive for now. New highs, new lows, still on the negative side. It will take some time before this one turns into neutral at least, and the stock participation, we have it on neutral. As far as breakouts are concerned, our main trading vessel is type of setups that we look for. We're still on yellow, so the markets are rotational and you can trade, but you need to exercise caution. So with that, this will conclude our tactical trading environment risk vest model overview. Now let's take a look at the current markets, and we're going to start with some charts and underlying indicators that show us the health and the strength of the market. Now, first thing, let's take a look at the S&P 500, and this is the chart of the ETF, the SPY. What you noticed, that what we did good last week was we rallied off through the 50 on positive volume, and we were able to hold it down on 30. So we did test right here. You can see right here we tested it on Thursday, and then we tested it another time on Friday, and we held the 50, which is considered to be a good sign. Now, there are a couple of things that are a bit worrisome. So the first thing that you probably notice here is volume on this rally has been below average. So we do have one issue there. If we are going to be following O'Neill's books precisely, we need that thrust on the follow through day, and when we have these rallies of the low, we need to see volume really showing up, something like here. You can see where was volume right here, or this bottoming action right here. You can see there's like intense bullish buying coming in, and we just don't see that right here. So still be careful, although as I said, it's a very positive sign that we moved over the 50-day moving average, the yellow line, and we held there. Now, as you can probably see right from the get-go, let me just draw a horizontal line right here. You can see that we are closely getting into this zone. So we hit the century mark right here. We hit the 400 right here on Friday, and we sold down. Now we have about 5-6 more points until we start hitting this zone right here, and that will be definitely a point where if I'm holding longs from down here, I'll be looking to scale some out. I'm not saying close them all, go short or anything like this. I'm just saying that this is an obvious place where we can see some resistance hitting. So it's a general place where you would like to take some of the profits, maybe move your stop losses to break even. Just try to get some of the profits in your account so your account can keep growing. Now let's take a look at NASDAQ. And NASDAQ hit that zone right here. I said it in our chat in Discord. NASDAQ is hitting the resistance zone, so you'd be better off, just scaling out. you know, decreasing risk as much as you can. Again, same thing with the S&P 500. We had a couple of days rallying through the 50. Volume came in right here, second day through the 50. We had some volume spike, but nothing major, nothing above the average. So we're still looking for some fighting right here between the bulls and the bears. You can see we are right at this zone right here, right at the resistance. So this might take a while. This might be getting back and forth, back and forth. Usually what will happen is we're going to be testing the breakout zone again. So I'm looking for a bit further retracement to about right here, 295, 296. Basically try, and if we can flip this zone, it was a resistance right here, resistance right here. If we can flip it and remain support, stay above the 50-day, maybe we see some volume coming in. I'm thinking that we might be actually looking to shove it up and test right here the 200-day, which is also, as you can see right here, there is another cluster of support and resistance. So there's like, if you are using point of control, if you're using volume profiles, you'll probably see here we have a volume node that is high. So I'm looking for the test of this 345, 346 zone. But that is only, as I said, if we are able to actually hold this as support right now, stay above the 50, the 50 can curl up, and then we need to see some volume coming in. So that's for the QQQ, small caps IWM, pretty much the same as with the S&P 500. They still just have a little bit more room to go, like 5 or 6 points until we hit this zone right here. Right now we are consolidating above the 50, but one noticeable thing that we're looking for with all the indices, we do lag the volume, so there's no real volume showing up right here on this rally up. Last but not least, let's just take a look at Dow Jones. And as you can see right here, same thing pretty much. There's no volume coming in. No, even on those up days, volume is well below average. So although Dow Jones do have, 320, 319. Yep, we have about 10 to 20 points of movement that we can explore to the upside. I'll still be reluctant to initiate any longs right here, especially with the action on Friday. We need to see how it will handle next week. So this is what I have for the indices. Now let's take a look at some of the market internals, trying to determine how well the markets are behaving. Apparently, although many people don't consider volume to be a clue, I will tell you right now, we do, and we definitely need to see more volume coming in on these rallies to the upside. So as I said, let's take a look at the advanced decline in the market internals. First things first, starting with the S&P 500 advanced decline line, you can see we bounced off the lows. We had a double bottom right here. For the S&P 500 with a higher low, the advanced decline line made a new low right here, and then it's just shoots straight up, making a new high right here, intermediate new high, basically corresponding with the price action. So all good on the S&P 500, no discrepancies or divergences right here. And as far as the new net highs, new net lows, although we are not seeing a proliferation of highs, at least we're seeing the new net lows dropping to pretty much the same level as the new net highs. So that's the positive news. So not a lot of positive news, but that's a good thing. As far as the Nasdaq is concerned, QQQ, same thing with the new highs, new lows. You can see that the new lows are going down, trending downwards. Advanced decline line made a new high right here, turned down, of course, with the market on Friday, but it's still making a new high in correspondence with what is actually happening in the index itself. Now, one thing that you need to notice here is we do have sort of a almost divergence. This is making higher highs, whereas the advanced decline line on Nasdaq is pretty much staying at the bottom right here. So there's a little bit of divergence, but nothing major so far. If we're looking at the IWM, you can see we do have positive net highs, which is great sign. Advanced decline line is turning up, no divergence, pretty much following price action. So IWM definitely one of the stronger indexes out there. And as I've said all year now, Dow Jones is just exhibiting the weakness of the entire market, but the advanced decline line is just shooting up and up. I mean, it's supporting that upper trend line, so it's looking really good. As far as put call is concerned, put call ratio, when we get above 1, then we do have some sort of an issue. We have a lot of hedging activity and so forth. We're staying pretty much range bound right here, so always good as far as this indicator is concerned. So there's no extreme pessimism, there's no extreme optimism. Anytime we dip below the 0.75, that's extreme call buying, and anytime we go above 1, that's extreme put buying. So we're looking for those extremes, nothing major right now. I wanted to show you the net new highs, net new lows for the general market in the United States, and this is how it looks. Pretty much new highs. We just have around 63, 60 to 65. It's been a range bound for the last couple of months, and the new lows are dropping, which, as I said, it's a positive sign. Another thing that I want to show you here, and this is the indicator that I use to go tops and bottoms in the market, some intermediate levels. Now, the first thing that I want you to notice right here, my oscillator is overbought. So when that happens, and this green line goes above 60 to 70, we do tend to have a market reversal. Same thing on the bottom, but now we're looking at the top. And I'll show you what I mean here. Let's just place some horizontal lines so you see. So we have overbought level right here. We had the previous one was right here. We had one right here. So what happened with the market? This is the S&P 500 at the bottom. What happened at the market right here? You can see on the 29th of March this year, and the market just rolled over and died. What happened right here? This was, date is the 3rd of June. What happened here is the market rolled over and died. And now we're having at pretty much about the same level right here. We had this at 72. Now we have it at 71.50. This is overbought. And what we're looking for is it might turn out the market is turning around and dying. Now, this is not the way it's supposed to happen every single time, but for at least for the last 3 instances, you can see that this is what happened. One more thing I want you to notice here is my stochastic is going upwards. The market is going downwards. These are lower highs. These are higher highs. Each time a stochastic is making higher high. And this is not confirmed by here the lines that we're using to build stochastic. So what happens is stochastic is making an absolute high right here of, it's at about 98, whereas this green line right here is making lower high than the previous. So there's like divergence between stochastic and the market and the database that the stochastic is built right now. So I'm looking for the market to do a temporary reversal. And as we said, there's some move for the QQQ, not for the QQQ, I'm sorry, for the S&P 500 and for the IWM, but the Qs have definitely hit their resistance zone. So I'll be very, very careful initiating any new long positions right now. If anything, I might be looking for some short-term shorts. VIX, as far as VIX is concerned, VIX is dropping. It's on the lower band of the Bollinger Bands, and the S&P 500 is moving further up. Now, I think that there's going to be another shove down a little bit, so we can expand those bands and move back up. Same things with the VIX. I think it's going to move to the midsection right here at the Bollinger Band and go back again. So this is what I have for you for my market internals. The one that I think is the most important right now is looking at this. As I said, every single time this has happened in the last 3 instances, even here, we didn't even get to overbought or oversold. But the previous time that we had that this happened was on the 4th of January, right here. Prior to that, we had it in November. when we issued that sell signal. So every single time that I see this indicator being overbought or oversold for that matter, the market tends to rebound. So in one of the directions, of course, either to the downside or to the upside. So I'll be very careful now, watching the market very carefully this week. The other thing that I said, very important, is that we are near resistance zones on the indexes. Now, with that, I will take a look now at my notes, and then we're going to take a look at industry groups and sentiment. Just one thing I wanted to mention before I go actually into my notes is I haven't done crypto in quite some time because there's really nothing to do. But what Ethereum did a couple of days and a week ago is one of the most powerful bullish types of chart patterns that it can do. So I'm just saying that we were basing here at the low. You saw huge volume support right here. You look at the volume, it's just insane. And we broke out of this bottom right here, that consolidation zone. We broke out of right here, and we moved above the 50-day moving average, and now we're seeing whether we can find support. So it's forming some sort right here of consolidation. So this is one of the strongest bottoming signals that you can ever get into the market. So I think that crypto now looks quite positive. Let's just take a look at Bitcoin and see what it's doing. See USD. Pretty much the same thing, but we need to move about the 50 here. So Ethereum definitely looking a little bit better than Bitcoin right now. But anyway, let's take a look at my notes. This is just something that came into my mind. I wanted to throw it out there. Now, in terms of my notes, there's only one thing that I want to add on to the previous discussions we had for the last couple of weeks, because in reality, nothing has changed. So I don't want to get and repeat all the things that we've said so far. I just want to add this to the things that we're looking to observe and see how the market responds. Now, notice here that every single time this WLI is the weekly leading index grown by advisory perspectives, you can find it. It's absolutely free on their website. Every single time that we've dipped below the -10, with few exceptions right here, we've gone into recession, and the recession you can see is this grayed out area. So there's been some sort of recession every single time that we have dipped below -10. And as of right now, the latest WLI growth reading is at -10.8, which is the 15th of July. They still haven't updated it, although I took the information today. But as of today, it's at -10.8, and only 2 times this index has been lower than -10, and it's not in the gray area, which is a recession. So this is the only thing that I actually have for you today in terms of my notes. I want you to know where we are, but as we always say, just pay attention to the stocks. Don't really care that much about what indices like this are telling you, because if there are stocks that are setting up, you have to take the setups. It's easy as that. You have to have general understanding where the market is, support, resistance for the indices, and so forth, so you know how to position yourself in terms of position sizing and risk. But overall, if there are stocks that are setting up, then you have to take them. I mean, it's as simple as that. Now let's take a look at the sentiment. You can see it's been generally rising. The bullishness in the market's been generally rising, which of course leads to the bearishness getting lower and lower. And that's no surprise. We hit kind of an intermediate low right here on the 6th of July, and for the last 2-3 weeks we've been going up. As far as the CNN Fear and Greed Index, you can see we are still in the fearful zone with 39. We were previous week, we closed at 38. Well, I'm sorry, the previous close, which was on Thursday, was at 38. 1 week ago, we were at the 26, and 1 month ago, we were at extreme fear. So if you look at the trend line, we're definitely going up. So that's some positive news right there. And as far as Bitcoin fear and greed index is concerned, we now moved into the fear, not extreme fear, but now into the fear zone with a rating of 30 over out of 100. So this is what we have for sentiment, and I'll take a look at some of the top and the bottom industry groups. And as usual, we're going to do it in Market Smith, and we're looking at the Market Smith Growth 250 list and this week's additions and deletions. So we're going to start by looking at the additions, and we're going to just scroll through the industry name right here. So what you see here in terms of additions is we have 3 chemical specialty stocks being added. That means that the chemical specialty group is showing higher relative strength. We also have computer software gaming, so electronic arts, Netflix, PRVA, this one was a good trade, FTNT. We also have PSTG, which is pure storage, computer data storage. Let's take a look at the groups down the list. We have containers, packaging, electronics, semiconductors, MPWR, clays, PLAP. We also have insurance brokers, medical, biomed, for companies from the oil and gas, US exploration and production. And pretty much that's it. So I'll definitely say that right here what we have oil and gas, United States exploration and production. So we have 4 companies from this group popping up. We have 3 for medical biomed, and we have 3 for electronic semiconductors, computer software and gaming. We have 4, and chemical specialty we have 3. So that's that. These are strong groups that are showing more companies joining in the Market Smith Growth 250 list. As far as deletions go, again, sort them out by industry. We can just start from here. It doesn't really matter. Utility, electric power use 2 down. We have medical biomed. So we had 3 in, 4 going out. So definitely this group is rotating the names within itself. Be careful there. Food, packaged, and finance property. We have 3 from the food and package. So we have Campbell Soup, Kellogg's, and PepsiCo going down, being removed from the list. So these are sort of the weak groups that we can see just by looking at the additions and deletions of the 250 growth stock list from Investors Business Daily's platform Market Smith. Now last but not least, we have the summary. And as far as the summary, the risk fast, as I said in the very beginning of the presentation, we still have it on negative. We have the setups, it's selective. The market is in an upwards test, but we saw we're getting very close to resistance on the S&P 500 and the IWM, and the Nasdaq's already there at the resistance, so be very careful. Put volume is neutral, volatility right now is neutral to going down. As we saw in our VIX chart, VIX is really moving downwards on the expanding lower Bollinger Band. And some issues that you need to consider that are shaping the macroeconomic views, definitely the rates. We have another Fed rate meeting coming up. Of course, inflation and rates, they are very highly correlated. We have the ongoing war between Russia and Ukraine, and now we have monkeypox and COVID coming back up. So definitely a very turbulent macroeconomic situation. So last week we had tried some more. Now we are to be careful. And as I said, I'll be very hesitant to initiate any long positions at the current position of the market indices and the general market. So I hope you guys really liked what you saw here. It was informative and it will help you with your trading throughout the week. Of course, please subscribe to our channel on YouTube, like our videos, hit those notification icons so you don't miss any of our new uploads. And please join us in our Discord server where we share thousands of ideas about trades that you can benefit from. And if I don't see you there, I'll see you here. Until next week, peace out.